In this video, I'm going to walk you through a trade structure, an options trade structure known as a broken wing butterfly. And I'm going to walk you through the three important steps that we talk about almost in every video: thesis, trade structure, and risk management. So I'm going to walk you through that. And I'm going to walk you through tiptoeing around the perimeters here of YouTube, just so we don't get off course and start talking about things that don't really mean anything. So we're going to take a look here at Regeneron. Now, the reason why I'm talking about Regeneron is because specifically, when you look at the comparison to some of the other names out there like Pfizer or Moderna, Regeneron is a company that hasn't been getting a lot of attention, but under the radar has a therapeutic that has seen a lot of success that a lot of people aren't talking about it. And this is why I'm liking the fact that possibly, if you looked at pairs trade, getting long a Regeneron and selling or using one of the other ones to pairs trade, that's an option. But we're going to talk about, like I said before, this structure that I'm liking or like in this specific stock, Regeneron. So we look here, we're hitting a new, on the 5-year chart here, we're hitting a new high at 678 that we just backed off here. So we went from 444 to 678. And if we just take a quick look at what that is comparison, not with that chart there, we want to do it with a line graph. So let's just take a look here, and that's about a 55% run. And the reason why I'm doing this is because we're going to look at some of the other companies. We're going to look at Pfizer. Pfizer, from high to low here, well, right now is about 39%. And Moderna is, well, let's just take it from the low here. And right here is about a 219%. So Moderna has seen more a significant run here compared to the other two. But when we look at REGN, I mean, overall, this company has been the best of the best overall. And when you look here, it's been very stagnant. We can even back this out to the chart here, and we can do a time frame of, let's just do 10 years. So 10 years here, we popped out back in June at this level here, and we've what we would refer to as possibly on the longer term here, it would be known as a cup and handle for technical traders or pattern traders, not technical, pattern traders. Let's just do a 20-year monthly. We could kind of see it a little bit better here. So this is big. I mean, when we're talking about monthly, we're talking about months. Before, normally we're talking about days. We're talking about months here. So monthly, we're getting into levels that we haven't seen all the way back into 2015. We've backed out. Now we've punched higher here. Overall, if we just talked about the companies or talk about this company, you know, what's going on with them just overall, and also what's going on with their therapeutic for COVID, there's a lot of good stuff that hasn't been talked about, and that push under the rug or the unknown is the thing to be excited about, where we could see this run higher here. So what I wanted to look at today was a trade, and now I'm not going to, they're notable for the last 2 weeks. There hasn't been big activity. This is a $677 stock, but what I'm doing here is taking a thesis with you, walking through, create a trade structure. Overall, I'm bullish. We're breaking out to new highs here. Could it continue to go higher? That's what it's looking like. There's nothing, if their therapeutic, which has been very successful, continues to be successful, you have to assume that that's only going to get more momentum. And the fact that I'm talking about, and possibly the fact that you may have not heard about it, but places in Texas and, well, Texas and Florida are the two main states that are pushing this right now, and they're having a lot of success. So whatever the debate you want to have, that's fine. We're just looking at stocks here, charts, and how to make money on movements and speculating higher or lower. So what I'm looking at here is on the January contract. There was an interesting buy here. We'll have to see if this actually opened here. Not huge, but meaningful. Someone bought 200 and with one trade today came in and bought 292 contracts. So 292 in just a clip like that, and they paid $18.90. So that's a pretty significant buy. That's not just somebody like you and I just putting out money. That's actually a pretty big bet. So a lot of times when people talk about unusual option activity, it doesn't have to be like this huge number. It's impact. what is being put on? Why is it important? Well, this wouldn't say, fly out of the radar and say, hey, oh my, there's so much attention here. But this is someone positioning, someone that is putting money real time and looking for prices to go higher here. Now, if we just followed them here, we would be paying $18.90 possibly. And the probability of this trade being in the money by 1 penny or more would be a 25%. You can look at the delta here. So this is a very, very speculative position, a bet here. If we take a look here at the implied volatility, the expected move for the next 144 days, it's pricing in $121 higher or lower. So 121 plus 677, that puts us right about $800. So with that in mind, I'm going to start structuring, because if that's the expected move and I'm speculating that prices go higher here, what do I want to do here? I mean, for me, this is going to take 144 days. That means it's going to take time to develop. And if I'm going to have time on my side, I want something that takes advantage of that time. And if it goes into that level, create a profit net. So you probably saw a little peek at the trade here. This is what I would be looking at. I'll be working with this one here because I'd be risking $2.10, which is $210 per position. I mean, this is something that could be put on by any account size. It has 144 days to pan out, and the max profit is at 800, is at that strike where we're short 2 contracts here. So we're long a call spread and short a debit spread. So it's long a spread, short a debit spread. So I'm buying and selling. And that's what we're creating this net here. And this is what it looks like on the Analyze tab here. So the most money that this can make, theoretically, it's not what we're going to play, theoretically, could be around $3,500. That's if at January expiration, it expires exactly at $800. Not where we're going to be. What I'd like to do is I'd like to see that debit turn into possibly $4.10. It depends on what happens here. We want to make sure, because especially we have time on our side, we got to make sure that net's wide enough to be able to have, if we're right, to be able to go into that, be able to trade around and have some of that decay come out of it, because we are long a call spread. So from, if you envision this like this, if we bought the 760 and sold the 800, 800 would be our cap. But what we're doing is we're offsetting that overall premium that we purchased by selling a debit spread, and that's where we get that body. It's what's known as a broken wing. And the reason why it's a broken wing is because it would be exact. If it was an exact distance between the body to each wing, it would be 40 points or 60 points, depending on which wing. So because I only did 760 to 800, that's 40 points. 800 to 860, which the reason why I'm selling more out there is because if I have profits, if it get a push higher above 800, I want to have a little bit more cushion on that side. Typically, we don't see stocks crash higher; you see them crash down. But when we get a big push up, you could see volatility shoot up higher here. So that's the reason why you want to work with it here. So overall, now we have a delta of 18 on this position. We went from a delta of 25, which was a low probability, now to creating something that has a higher probability, because at this point we need from 760 to 800. So this is our break even right here. At January, as prices start to increase, we start to make profit into these levels here and throughout time. So that's why this structure would be something I would be interested in on looking at doing and putting on. Again, this is not the trade. What I'm trying to do is show you a thesis, a trade structure, and the risk management of this. I wouldn't be managing this. I wouldn't let this expire. I would be looking to have this go in for a profit, take this off and manage it there. And there's other ways to do this. This is not one way to trade, but this is a way to trade. This could be something for someone who wants to put something on and not worry about timing. You could look at a spread. You could sell a put spread. I mean, there's so many different ways with options trading that you can create opportunities for yourself than just buying calls. And that's the great thing. But it's also the complex thing as well. So hopefully what we covered today was an opportunity to look into. How you want to trade it is how you want to trade it. But this is how we find opportunities. You got to find opportunities today and make money tomorrow. This is the way to do it. That's what I have for you. So hopefully you learned a couple things here. We'll have more videos. We'll talk about more things. There's a lot of opportunities. You can always come to countervest.com. We talk more about that, more in depth, go deeper in that. But that's what I have for you today. I'll see you in the next video. Until then, good trading.